markets in detail. Friends, today I will be sharing with you a full course on support and resistance. If you learn support and resistance, I think that is more than enough to help you to make money from the stock market. I recently uploaded candlestick full course on candlestick. Now, if you use this support and resistance information with the candlestick pattern that I taught you, I think you will be much better placed to make money from the stock market. So come on, let's learn about support and resistance. So understanding support and resistance level, we have seen how single and multiple candlestick charts can form various patterns as the price of a stock changes. Like the previous video, I taught you everything. Now we will look into two important concepts, which are support and resistance levels. Let's look at an analogy to understand this concept better. So reverting back to India's favorite sport, cricket, let's assume there are two batsmen named Vinod and Vikram. Now Vinod is a hard worker and he puts in a lot of practice outside of the game. However, in spite of his best effort, he's never been able to hit a century in any of the matches he's played. The most he scored has been 90 runs. He's never been able to break past the 90 run mark. We have then Vikram, on the other hand, is a natural at the game. He does put in equal practice, but even when he's not particularly in great form, his score has never fallen below 50 runs. In other words, he's never scored less than 50 runs in any of the matches he's played in. You see, comparing these two players, it's evident that for Vinod, the hard worker, the 90 run mark appears to be a point of resistance above which he cannot score, no matter how much he tries. But for Vikram, the natural, the 50 run mark seems to be the point of support that holds up his score, never letting it fall below the point, even when he's not particularly prepared. So this, my friends, when translated into the share market, is what support and resistance are all about. So what are support levels? Now let's learn in detail both the concept. First, we will understand support level. Now, support level are essentially the points on the price chart of a particular share or an index below which the price of the asset refuses to fall. Here's what generally happens before a support level is achieved. The price of the stock is on a downtrend, so the demand for the stock rises as more buyers rush in to purchase the stock at lower prices. At some point, the number of buyers become greater than the number of sellers. In other words, the demand starts to exceed the supply. So the excess demand stops the stock price from falling further, and the price of the stock turns around and starts to rise instead. What are resistance level? Resistance level are the points on the price chart of a particular share or an index above which the price of the asset refuses to rise. Here's what generally happens before a resistance level is achieved. The price of the stock is on an uptrend, so the demand for the stock falls as fewer buyers are willing to purchase the stock at higher prices. However, more sellers are willing to sell their holdings for profit. At some point, the number of sellers became greater than the number of buyers. In other words, the supply starts to exceed the demand. So the excess supply stops the stock price from rising further, and the price of the stock turns around and starts to fall instead. Now, there are various types of support and resistance. Let's first look at types of support levels. Support levels can be either horizontal or diagonal. Let's look at the Nifty support levels as an example for horizontal support level. You see here in this image, in the above image, you can see that at 2 points, these are the 2 points, the price of Nifty 50 dipped down to around 11,470 and then stopped falling further. Instead, it started to rise back up after trading at around 11,470. When we identify these price action points and notice that they are roughly at around the same price point, we call it a horizontal support level. This is the horizontal support level. Now again, let's look at Nifty support levels as an example for diagonal support levels. This is the diagonal support level. You see, here it is a support, then we see here it's a support, the stock reverses from there. Here is another support, stock is reversing from this diagonal support level. As you can see, we can identify around 4 Nifty support levels easily in the chart. You can see 1, 2, 3, 4. Now the pattern, however, is not horizontal because the support keeps increasing at each succeeding price action points. Now This essentially means that the market is on an uptrend, because even though the price of the share falls occasionally, the point at which it rises back up continues to increase. In the image above, the first support level comes in at around 1900 here. The second one is located around 2250. The third is at has increased to around 2750, while the fourth has risen up to 3500. By connecting these successive lows points, we get a diagonal support trend line. Okay, this is how you make a diagonal support trend line. Now we have types of resistance level as well. Now just like support, resistance level can also be horizontal or diagonal. Here's an example of horizontal resistance. You can see here, this is the example of a horizontal resistance level. Now here in the image above, you can see that at 3 points, the price of Nifty 50 rose up to around 11,585 and then stopped going up any further. Instead, it started to fall after trading at around 11,585 at 3 consecutive points. Since these price action points that we have identified are roughly at around the same price point, we call it a horizontal resistance level. And let's now see what diagonal resistance levels are like. This is the example of a diagonal resistance level. So understanding it in detail, in the image above, you can identify around 4 resistance level easily. Okay, 1, 2, 3, 4. The pattern here is diagonal because the resistance keeps decreasing at each succeeding price action point. This essentially means that the market is on a downtrend, because even though the price of the share rises occasionally, the point at which it falls back down continues to decrease. In other words, the price tends to fall easily. In the image above, the first resistance level comes in at around 11,300. The next one is located around 11,250. The third resistance level has fallen to 11,150 here, first, second, third, and the fourth one has decreased further down to around 11,050. By connecting these successive highs, we get a diagonal resistance trend line. So this is a diagonal resistance trend line. Now, understanding support and resistance, a reversal of rules. So far, we have seen that the price of an asset rises back up at support levels and falls back down at resistance level. However, there are times when these levels are broken. In other words, the price of the asset can occasionally continue to fall below a support level. When this happens, it's known as a breakdown. And following a breakdown, the price action points that was earlier the support level then becomes the resistance level. Now, if you look at the example, here's an image of such a breakdown role reversal to make things clearer. This was the support, this was the previous support for the stock. Now here, the stock gave a breakdown. Okay, it went below the support level. Now this support, which was previously support, has become the resistance. Now this will be resistance from where there will be selling pressure and the stock will come down. Before here, the stock got buying pressure and it went up. Since it gave a breakdown, now it came down. Now it has become resistance and it reversed from that resistance level. So in the image above, you can see how the price action point around 11,675 was earlier a support level, and once the price breached this support level, the same 11,675 and its nearby value became action points that act as a resistance level. Now conversely, it can also happen that the price of an asset continues to rise past a potential point of resistance. Here the price of the asset continues to rise past the level of resistance. When this happens, it's known as a breakout. And following a breakout, the price action point that was earlier the resistance level then becomes the support level. So you can see here, this was the previous resistance. Okay, then the stock gave a breakout. Now after the breakout, this previous resistance will become the support and the stock will get buying pressure from there. Here it was getting selling pressure. After breakout, this becomes support and from there it reversed. Now, how do support and resistance levels prove useful for traders? How can you use it? So, okay, then we have seen what support and resistance levels are, how they form trends of different kinds, but what is the practical use of this metric? Come, let's find out. Scenario 1. So, you have purchased a share of PVR Cinema for 1000 rupees. By studying the weekly chart for that company share, you notice that currently support levels are concentrated at around 700 rupees. Meanwhile, its resistance levels are concentrated at around 2200. So you know that with support levels being the minimum points below which a share's price will not fall, the price of this share will likely not fall below 700 unless a breakdown occurs. Similarly, it may not rise past 2200 in the near future unless a breakout happens. This means that the price of the share which you purchased for 1000 may not fall below 700 or rise past 2200. So you can use this information to set a target price at which to sell your share for a profit. You can also set a stop loss order at the lowest price that the share may touch. In this case, the resistance level will be the target price and the support level will be the stop loss mark. To summarize, the entry point is 1000, target price exit point will be 2200 and the stop loss mark would be 700. Now scenario 2. Now say you are going to do a short sale where you sell first and buy later. Assume that your entry point is again 1500. This means that you have sold the share at 1500. So you need to buy the share later at a lower price to make a profit. By studying the weekly chart for the company's share, you notice that currently its support levels are concentrated at around 800 rupees. Meanwhile, its resistance level are concentrated at around 2000 rupees. So the price of the share will likely not fall below 800 unless a breakdown occurs. Similarly, it will not rise past 2000 in the near future unless a breakout happens. This means that the price of the share which is sold for 1500 may not fall below 800 per or rise past 2000. So you can use this information to set a target price at which to buy your share for a profit. You can also set a stop loss order at the highest possible price that the share may touch. In this case, the support level will be the target price and the resistance will be the stop loss mark. To summarize, entry point will be 1500, target exit will be 800, stop loss will be 2000. So this was the detailed analysis, my